Okay, it's the 28th of October 2024. We have about 30 minutes to the New York Open. We're going to get to the charts very soon. Just give me a second. Just need to post the link on the group. Um, yeah, perfect. Okay. Right. We're good to go. Okay. So we're going to get to the charts right now and do our analysis as usual and see if you have any opportunities, any trading opportunities for the day. Okay. So today is the 28th of October. This is the NFP week. It's a little strange because it's still the end of the month. And usually they don't do this. I said this several times before as well. Usually they don't do this because if the if the first Friday falls on the first of the month, they usually do NFP the following week. But the reason they're having NFP this week, being it's still the last week of October, and the first falls on a Friday, but it's still the last week of October, is because next week is election week, right? So next week there are two major events, which is the US elections and also the interest rate decision, right? So these two, but more importantly than the interest rate, the US elections overshadow everything else, okay? And we'll talk more about that later this week. But this week is NFP week, right? But that's on Friday. Today there is no news at all, so we shouldn't expect probably any sudden moves or anything. It should be a regular trading day. Tomorrow, it's not too important. There is not much important news tomorrow either. On Wednesday, we have employment change news. Could move price. Um, this could move price. There is some news events on Wednesday. Thursday, it's again not that important, but on Friday is the big one, is NFP, right? That's the big one. So everything this week is going to be overshadowed by whatever the plan for NFP is. Just keep that in mind. Um, right, so let's get to the chart. So on the daily, price is still ranging. So we've been since the 21st of October, which is last Monday. This entire week we've ranged. So to this entire week, 5 days, 5 trading days, we've just ranged between either above weekly support 2722 or below it, and below 2750. Right, so we're stuck in between a range, about a 300 pip range between 2750 and 2722. Right now, I don't know if we're going to have a breakout today to the upside, or not, but we've been ranging the last 5 days. The entire week has been ranging. So the week, that's the weekly candle, right? It's a small body bull candle, uh, showing that there is this small body bull candle shows that there is a lot of upward potential. That's what it shows, right? That there is a lot of um, sorry, one second. Yeah. So the small body bull candle shows that there is a lot of upward potential. Price can move easily back to 2750, break above the previous weekly high, head to 2800 and even higher. Once it breaks to once 4 candles close below above 2800, we're heading to 2850, right? That's all possible. 2800, 2850, it's all possible because there's no information on the left, so there's nothing to stop price. This small body bull candle, this bullish close above weekly support, is a sign that there is still a lot of bullish volume to take price up. Just keep that in mind. I don't use the weekly or the daily time frame for decision making when I'm session trading, but I just have an idea of what the market is doing, all right, for the week. But I don't use that. I don't use any of that ideas or that sentiment when I'm trading a session. Okay, because I'm trading the 50-minute time frame. I'm trading the first 2 hours, the 2.5 hours of the New York Open. So it really doesn't matter what the daily or the weekly is doing to me. Okay, so let's get to our trading chart. Now, before I do this, before we do our analysis, draw our zones, I always do a recap of what the previous day did. So the previous day was last Friday. So if you watched the last Friday stream, if you were here, then you would have seen that our trade entry or signal or setup, whatever you want to call it, played out perfectly. All right. So I'd given 3 entries. These are the entries: 2726.3, 2727.6, 2728.3, right? And the stop was, we had initially put our stop, but then when price created this M15 candle, the stops are below here. So if you took these 3 entries on this candle, then your stops would have been, on the first entry it would have been about 30 pips, then on the next one 24 pips, and on the last one about 10 pips. Okay, and the TP was, the first TP was 2738. That was the area, 2738. So that was a fairly decent, that was a 100 pip move, a plus 100 pip move. And then I said if price breaks the light red area, we are going to the next light red area. So when we did come here, these were areas also that we had marked for sells at the beginning of the session on Friday, and price did react to them. And if you took those, if you had placed pending orders there with the stop above that, because I'd given the stop loss as well, it's just above there. So for each of these areas, the stop loss is always just above the zone. So this zone, the light red area ends here, that would have been the stop loss. These sell trades worked as well. You would have got easily 1.5 hour, 2 hour, 2.5 hour trades on all of these if you did take the sells. And then eventually we broke the high, and then the next area was here. So the entries that given was 2743.79. That's the only one that got triggered on Friday. And if you did take that trade, stop loss would have been about 70 pips, and price dropped today in the Asian session 190 pips. Okay, obviously I don't trade any time off. I don't trade all those hours. I just trade 2.5 hours in the New York Open. But these are all potential trades that I do give out in the live stream. Okay, so let's delete all of these. Let's go to the H4. Let's get rid of all of these lines and start with a clean chart. Let's get rid of all of these support resistance lines as well. Okay. I think that's good. Yeah. So that's our range today. We've got about a 300 pip range. So that's where we're looking. Now these lines that you wouldn't have seen them in the previous streams, these white lines, these are basically the Asian high, Asian low. These are all from the indicator that I use. I had switched these off for the previous streams, and I was drawing it manually. So if you want to learn how to draw it manually, you can look at any of the previous streams. You'll learn how to draw it manually. Just to save time, I'm using this from the indicator. So it automatically plots out what the Asian high or the Asian low, the London high, the London low is, right? It just tells me what price has done so far and what it possibly could do. If you want more information on this, look, watch the previous streams. You'll understand how I use this information to make a decision if I'm to buy or to sell. All right? Okay. I think we're good. We can draw our zones now. Right? Yeah. Okay. I know the chart is a little bit cluttered, but don't worry about it. We'll just okay. Um, yeah, it's cluttered on the higher time frame, but when you go down to the lower time frames, it'll be okay. So the market opened with a massive gap. Okay, 100 and that's why it closed, and we opened there. Yeah, it's about 120 pip gap. It gapped 120 pips and pushed down. Now these kind of things do happen because we're getting close to the elections. That is why I've said I will not be trading the election week. So next week I'll not be trading. I'll probably be here on the live stream drawing out the zones, but I don't think I'll be taking any trades because stuff like this can happen overnight. It can happen, right? Or even during the week, if you're trying to open a trade, you might not get filled in, or if you try to close a trade, you might not be able to get out. So all of this stuff can happen during the week, during next week, because it's election week. So I personally will not be trading. Okay. Okay. So let's draw up our zones. So we have. Um, it's pretty ugly because of the gap, but we have to do this anyway. Okay. So we have supply right here. Now that's a massive drop, but because there is a drop, you got to visualize that that's a big bearish candle coming down, right? That gap symbolizes a massive bearish candle. There was no buy orders at that point, and price just dropped. So that's huge. So price dropped to the next place where there were buy orders. The next place, and the next place was here, right? 120 pips later was the next place where there were buyers, right? So that's a massive daily bearish candle. Even though you can't see it on the chart, that's what you need to visualize. So there's a rally and a base and a drop on the 4 hour, right? On the 4 hour. So this is where the 4 hour candle ended. The previous 4 hour candle on Friday, the last 4 hour candle of Friday, that's where it closed, right? And then the next 4 hour candle opened with 120 pip gap. So there's a 120 pip bearish H4 candle there that you can't see, right? That's how you read a gap, okay, in the market. That's how you read a gap in the market. So there's a rally, a base, and a drop, and you can see price has touched that and dropped again. So if it wasn't supply, this wouldn't have happened, right? Price would have gone right through it. But because it's supply, price touched. So the open of that is 442, and the high of this is 461. Yeah, so price perfectly touched that box. When was this? In the London session, and we dropped 165 pips, right? Because there is supply there. So price hasn't broken through it yet, so we're going to still keep that supply, even though it's touched. 739, open is 442, and the high is 775. 775, 442. Okay, right. Now this zone has been tapped into. This was the original zone. It was a 198 pip zone, almost a 200 pip zone, a supply zone, rally, 4 basin candles, 1, 2, 3, 4, and the drop. The zone started out here. Price did come here last week on, I think, on Wednesday. On Thursday, it came in here. It came in about 46, that's 1/4 of the way in. And then it came further on Friday, it came another 91. So it's come 50% of the way. Price has already come 50% of the way into this zone, right? So we're going to have to now narrow this zone down to the high of that candle. And let's get rid of this light box. Okay. So this is high 775, 795. 7, 9, 5. 7, 9, 5. 7, 9, 5. 7, 9, 5. 7, 9, 5. 7, 9, 5. 7, 9, 5. 7, 9, 5. 7, 9, 5. 7, 9, 5. 7, 9, 5. 7, 9, 5. 7, 9, 5. 7, 9, 5. 7, 9, 5. 7, 9, 5. 7, 9, 5. 7, 9, 5. 7, 9, 5. 7, 9, 5. 7, 9, 5. 7, 9, 5. 7, 9, 5. 7, 9, 5. 7, 9, 5. 7, 9, 5. 7, 9, 5. 7, 9, 5. 7, 9, 5. 7, 9, 5. 7, 9, 5. 7, 9, 5. 7, 9, 5. 7, 9, 5. 7, 9, 5. 7, 9, 5. 7, 9, 5. 7, 9, 5. 7, 9, 5. 7, 9, 5. 7, 9, 5. 7, 9, 5. 7, Okay, right. Okay. Now it's come only 50% of the way. Just less than 50%. It's 198 pip zone, so it's 200, 199, 200 pip zone. It's come 92, 93 pips into that zone. So since it's not crossed the 50% mark, I'm still going to keep the high liquidity zone label right there. So that zone right there is still a high liquidity zone. A high liquidity zone means a zone that has taken out an opposing demand zone. So this drop here took out this demand, right? Rally, two basin candles and a rally, or rally, three basin candles and a rally, and it took it out. And there's also a drop, a base and a rally, and this move took out that as well. There was a demand zone here, H4 demand zone here, H4 demand zone here. This move down took out both those demand zones, so that's why I call it a high liquidity zone. And more than 50% of the zone is still there, so I'm still calling it a high liquidity zone. Okay, I'll extend this to the right. If you watch Friday's stream, you'll understand why this is light trade. Okay, it's basically a liquidity area within that high liquidity zone. Now we do have a drop here as well, so we have a rally, a drop, a rally, drop, a rally, a base and a drop, and then we have a rally and a drop again here, right? So we do have some sort of demand here as supply here as well. All right, it's a rally and a drop. We're going to look at that on the 1 hour time frame. Yeah, so on the 1 hour it's very clear there is a zone, there's a rally, two basin candles and a drop. Okay, so this high is 4461 844. Okay, this high is 8461 4. Okay, perfect. So this is the closest H4 supply zone, this one. There's supply here, there's supply here, and there's supply here. Three supply zones, okay? And above that, there's nothing. Above that is all-time highs, okay? So we've got three consecutive supply zones above current price. So let's look at demand now. So we have a wick here. We have no push-up. This is the only push-up we have. So we have a drop, three basin candles, and a rally. So let's draw that. It's 38, 74, and 40. 78, 74, 38. Yeah, 40, 77. Yeah, so I'll have to consider that as a base. A drop, three basin candles, and the rally, right? And price has come into it. So the open is 3004, 708, 727, 7, 708. Okay. Just look at that on the 1 hour. Yeah, prices come deep into it. It's 130 pip zone. We've come just about 2/3 of the way into it. It's not 50% of the way. Yeah, 50 pips in a 128 pips. Yeah, so just under 50%, okay, of the way. So that is the closest demand that we have. Closest supply, closest demand. Now here there is a drop and a base and a rally. Prices barely touched it, so we're going to extend that to the right. Um, okay, and that light red area, light green box, is again a liquidity area within that dark green area. Okay, yeah, I think we're good. And that is a high liquidity zone. So I'm going to mark that. We had marked that on Friday. So if you want to see why this was a high liquidity zone, you'll have to watch Friday's stream. The first 30, if you watch the first 30 minutes or the 40 minutes of every stream, you'll see how each zone is marked and why the way I mark it the way I do. Yeah. Okay. So this is 230. Okay, let's extend this also right in case price pops down or should or just falls to this area. Okay, so now we've got, I think we've got it covered. That's about 300 pip, and we've covered about 260 pips up, and we covered about 300. I think that's good. Okay, that's good for the next 2 to 3 hours. Okay, so 2722 is our weekly, um, yeah, is our weekly support level, 2722. Right, you can see price dancing around that area all of last week. The week before last, we closed right at 2722, and then we just danced all week at 2722, between 2750 and 2722, right? That's about a 300 pip range. Okay, so here's what we have. We got about 6 minutes to the NY open. Let's take a closer look at these areas now and identify which out of these two and this one, which are high liquidity zones and which are not. So if you look on the 4 hour, it's not visible, but on the right, so this is a high liquidity zone because you have a supply zone right here, a rally, 3 basin candles and a drop, and this zone took out that supply. Okay, so this would have been the supply, about a 98 pip zone, rally, 3 basin candles and a drop, and this move up took out that. So this is a high liquidity zone. Now, and this one below is a high liquidity zone as well. This one here is not because price has come more than 50% into this zone. This was the zone, original zone, 140 pips, and price has come more than 50% of the way. So above here, let's see if this is a high liquidity zone. So price did, there's a drop, all of that's a base and a rally. Then this didn't take out that low. So no, this is not a high liquidity zone. I'll move that there, that's not a high liquidity zone. And the one above here, that did take out this demand. So this drop here, this drop that you see here, did take out this demand. Okay, there was demand right here, and there was demand here that was created, and there was even demand here that was created. Yeah. So these 3 demand levels were taken out by this move down. So that is a high liquidity zone. This one right here, right? There's a gap there, and I explained what that gap means already. Okay, let's just clean this up. 15-minute time frame is my entry time frame. So I just want to clean it up on the 15-minute time frame. Okay, perfect. Okay, so far this is what's happened. Since we have our Asian high, that's the Asian high, that's the Asian low, that's a London high, that's a London low. These automatically plotted out by the indicator that I have. If you want more details on this indicator, you can find a link on it under this YouTube video, under this stream. It's there on all my streams. Okay, and even if you want more details on this trade manager, you go and click the link. You can test these out for free or through the MQL5 site, and you can get details. There are plenty of examples of how to use them and all of that. And if you want to reach out to me and ask me more questions, then you can directly message me on MQL5 or any of my links that I've provided, and I'll give you information on all of these, right? They come with user manuals, they come with a free trade plan. This indicator comes with a free trade plan of how to use it, because this indicator also has buy and sell signals. I don't use it here because I want to show on the streams how to trade without the support of support of any buy or sell signals. Okay, right. So the market gapped, opened here. There was a huge gap, 120 pip gap, right? That was the close, that was the open, 120 pips. We pushed up, create the Asian high. We came back down and we created the Asian low. Price came back to retest the Asian high, couldn't make it all the way up, pushed back again, and couldn't come all the way down to the Asian low. Range there, went up, broke the Asian high, closed above, created the London high. So in the Asian session, we traded about 150 pips, 155 pips, closed above the Asian high in the London session, created the London high, closed back below uh, the Asian high to come back to the Asian low, right? We created the London low on the way down. We've retested the London low. We've closed back above it in the pre-NY session. We've closed back above. We retested the low, so that's the low, right? We've retested it and we're pushing up, right? So we should push up back if we do not close back below. Okay, so now that we know what price has done, so right, so 155 pips in the Asian, about the same in the London, about 160 pips in London. So there's a lot of volume. So now that we know what has happened in Asian and London, so we created the Asian high, came back, created the Asian low, closed above the Asian high, created the London high, closed back below, tried to come to the Asian low, couldn't, created the London low in the process, retested the London low, and now that we've retested the London low, the next possible move is to go back to the London high, which is there, into this supply zone. That's the next possible move. If we don't close above the London low, if we close above the London low, we're coming to the Asian low. We're coming deeper into this zone, all right? Otherwise, if you don't close below the London low, we're going up to the Asian high. That's the move up, right? The EMAs are flatlining at the moment. That just tells us this price is ranging. So if you look at the 4-hour time frame, we're just ranging, right? These are just candles ranging side by side. So this candle, this invisible candle that you can't see, the next one, the next one, next one. So all these candles, 3-4 candles have been ranging. Now, since we're very close to demand and it's a high liquidity zone, we're going to look for a liquidity candle like we always do. We're going to look for a liquidity candle and see where a possible buy trade could happen if prices to go up. Okay, so on the 4-hour, on the 1 hour, we have this massive wick here. That's a liquidity wick, 76 pips, right? Yeah, 75 pips, and price has come more than 50% of the way into it. Okay, yeah, so okay, so below that, so we're gonna mark that out. Gonna mark that candle out, right? So this is high 306 626. 306 626. Right, that's that candle. Price is pushing up from it. We've broken one low. Okay. If I see another 15-minute low break, I might take a buy trade here. Okay. Anyway, so that's that one. That's a liquidity candle, right? On the 30-minute, that's a almost a bullish engulfing candle from this high liquidity zone, pushing price up. Okay, and price has come there. We have another liquidity candle in that area, which is that. Yeah, so that's just come down to that high 29.30. Yeah, it's better. 20. Okay. $31.90. Sorry. Okay, that's better. Okay, and on the 15-minute, yeah, it's this candle right here. Yeah, this candle should hold to push price up. Right, this candle should hold. That's a 40 pip candle. Should push price up. This broke. Yeah, I want to see another 15-minute low low taken out to trade this candle to take price all the way up here. Maybe 100 pip move. Let's see. Maybe we're going to go straight up here. Okay. But I want to see a 15-minute low. It might, if it happens, it happens. If it doesn't, price goes up, that's fine. Because we have retested the London low. That's the idea that I said. London low has been retested. Price is pushing up. We need a close below this for price to come down. If it doesn't close, we're heading all the way up here. We're heading to the London high, right? So that's a 120 pip move. That's the move that I want to take. Okay, so that's that liquidity candle. Then further down to the left, there's nothing here. There's nothing here. It's 37 pips. No, there's nothing there. There is this bullish engulfing candle. Look on the one now. This candle right here. This candle right here. The 15-minute. I don't like the candle because it doesn't have a bottom wick. This candle doesn't have a bottom wick, but it is a liquidity candle on the 30 minutes. It's a bullish engulfing candle of this candle from this area going up, pushing price up. Price did come to this. We tap this, we are heading up. 270778. 270778. Okay, so that's the next area. This candle, but I'm not a. This candle is right at weekly support as well. That's the only reason I'm considering this candle. I don't like the fact that this candle doesn't have a bottom wick. See the difference between this candle and this candle? Look at this candle and this candle. This candle has a wick, fairly bigger wick than the top. This has no wick, almost no wick, and this one has a bottom wick as well to push price up. So the only reason I'm considering this area is because of weekly support 2722, right? 41. Okay, I'm gonna mark this one as well. This high, 542124. 542124. Okay, and then this one will be below that. Okay, right. So this, if I take trades at any of these areas, the stops are always below that zone, below that candle that I've marked. Okay. Um, yeah, we are pushing up. Just going to wait for the 15-minute candle to close for us to move up. This is the trade-in candle. This candle right here that retested the London and closed above. This is the trade-in candle. That's a 41 pip candle. Tapped it, yeah. Yeah. 198788. Yeah, we are pushing up. I wanted a deeper tap. I wanted a 15-minute candle to break another low. So possibly if the next 15-minute candle breaks this low, price should come deep. I'll take a trade here, stops below this candle here, or stops below this here to go up. If it's here, then that'll be a 20 pip stop loss. If it's here, it'll be about a 35 pip stop loss. To go up all the way here, that's a 140 pip move up, right? I don't want to chase price here because price could pull back, and I hate holding drawdown. Absolutely hate drawdown. So I want to see a pullback to be able to take this trade going up. This is not a high liquidity zone, so I am anticipating price to break right through this, hit to the London high, right? That's the London high right there. Hit to that high. That's the move I'm anticipating today. Okay, but price needs to come down for me to be able to take a buy entry to get up here. This candle, let's just inspect this area. Even though it's not a high liquidity zone, let's inspect this area. So we do have some rejections there. Let's look at the 5-minute. Yeah, that's a bearish engulfing candle. Yeah. Yeah, once we close above the Asian high, which is 2740, once we close above 2740, if a 5-minute candle or a 15-minute candle closes above 2740, if we get here and a 5 or 15-minute candle closes above 2740, we're heading all the way up here, another 44 pips. We're heading all the way up to the London high. My only concern is that this candle is a bearish rejection candle, a bearish engulfing candle, this candle right here that created this move down. So that has liquidity in it. So it can easily stop price like it did here and push price down. That can happen again. But if I do get in on a buy here, entry here, I will close most of my position up here, majority of it, and maybe hold a small position going up to the London high. I'll not hold my entire position going up there. All right. So that's the trade idea that I'm looking for. I need to see a pullback. In the pre-NY session, price broke one low, one M15 low. I want to see price break another M15 low to get in on this trade. Which means then if it breaks a low, price is coming down. That's the trade that I want to take going up. Okay, that's the idea. Now in terms of sells, if you get up here, this is a high liquidity zone. There is no candle there. There's no candle there. So it's hard to anticipate what's going to happen to draw a zone. There's no candle there. Price has touched it already. We've touched it and we've dropped 165 pips. But here, this is a liquidity candle right here. $72 pips. $361, $660. $361, $660. Yeah, this candle right here. Yeah. So this candle can hold price down and push price back again. Just keep that in mind. This candle right here. 279. 279, perfect. How big is that candle? 62 pips. We look on the 5-minute and narrow it down a bit more. Yeah, we're pushing up with no opportunity to get in. We're just pushing up. We're pushing up. So NY opened. This is the first 15-minute candle of the NY open, right? And we're pushing up. Just 1 second. Yeah. Yeah. So no chance to get in unless the next 15 candle breaks his low and comes down to go up. There's no chance to get in. Now we can anticipate a reaction here. This low 660 and this high is 279. 279, 660. Yeah, we can anticipate some sort of a reaction here. But this is the move up that I was expecting. So already 28 pips. Today is Monday. Anticipate the market to be a little bit slow. 25 seconds for this candle to close. The 5-minute. Yeah. Yeah, I will not take sells here, even though this candle might hold price and push price down. I might not take sells here because we are very bullish on the high time frames, right? We're still bullish on the daily. We're very bullish on the daily, and on the 4-hour, the 1 hour. We are bullish. We've created support, and we are very bullish. There's a clean space to the left here. Price can come right through it. So I'm not going to looking to take any sells here. And I can't take any sells here either because I have no candle. I don't know which candle to trade because this is a drop. So I'm going to have to wait for sells for price to come a lot higher to take sells into this area. Yeah. Okay, the 50-minute candle closed bullish above this resistance area. You can see this M15 resistance right there. We closed above it. If we pull back, I'll get in on buys. If you don't and continue, so be it. Yeah, that's a nice candle. It's a very nice candle. Liquidity candle right there. Just 897, close 896, 6. $40.70. So if I were to sell, these are the levels I'd look to sell at. Stop, stop maybe here. It's a little too large, 50 pips, or here this would be better, 38 pips, and this stop entry here, stop above there, 20 pips, or here 27 pips. So those would be the entries if I were to sell. Yeah. Okay, we are pulling back. Let's see if we break a low. Price needs to break a M15 low for me to be able to take a buy trade. London high, the idea is still the same. Head to the London high. We've retested, head to the London high. That's the idea. 53 pips. 28. No, it's not coming. It needs to come at least here. At least here. No. Open 288. Okay, so I'm going to place a pending order right there. 288. What happened? What happened to my sound? So, I hope I'm audible because I hope I'm audible. So stop below that candle right there. Okay. Seven double eight. Just not sure what's happening to my sound. I can't hear anything, any sounds of my platform. What's going on? It's just no, nothing. Sound on the stream is good, I think. Okay. Anyway, so I got it. I took an entry right there because that's a rally, and those are all basin candles and a rally. I was hoping price would come deeper so that I can get a better entry. But we are very bullish. We've retested the London low. The whole idea is, like I said at the beginning of the session, just before the session started, the idea is we've retested the London low. We should push to the Asian high and then the London high. That's the move I'm anticipating, right? Anticipating about 120 pip move up. Let's see. 38, maybe 40 here. Yeah, so at 40 pips, partial positions should close. That's how the trade manager, I've set the trade manager. And the trade should close, and I'm probably going to hold the trade after that until we get here, right? So, or maybe I might close if we get to, I might close the entire position if we get somewhere here and we see a reaction. If I see candles reject the Asian high and close back below, then I might reject prices probably coming down again. So I might close the trade. But first TP is about 40 pips. Okay. Right. Yeah, I was hoping to get more positions here if it did come deep to go up, but it didn't. Just touched that, went straight up. Touched entry. I just got in under 2732.8, 2732.7. That's where I got in. Okay. Sells. Let's get back to sell. So that is a liquidity candle that you could sell from coming down this light red area. Above that, not really. Above that is that, but that has no top wick. It's not really here. There is nothing. So let's look to the left here. This candle right here. This was we had marked this on Friday, and price did. I think we got the first entry was triggered, and price dropped. You know, it triggered. It fell here, but it would have got triggered here if you had it. If you had taken a pending order, you would have got triggered here in the London session today, and price dropped 150 pips. Yeah. So I'm going to still mark out this candle. Zero 052 288. 0. Okay, so we've come. Let's look at that candle in 15 minutes. Yeah, it's fine. So in that 30-minute, that's a 76 pip candle. We've come about 48 pips. So two-thirds of the way. Price has come two-thirds of the way into that candle. What's happening here? Coming down again. $0.32. Okay, so that's another entry there. I'm placing another pending order there. Stops same under this candle, right? There. Then 66. Yeah, it's fine. Okay, three entries, right? Um, this closes 2730.3. So 2730.3 second entry. Third entry 2728.5. Okay, 2728.6.5, somewhere around there. Right at this the London low. If we do come deep in, stop loss is still same under this candle, anticipating a move up here to the London high. We'll take partials on the way up. Okay, where were we? 15-minute. Yeah, so this candle, this low is going to break. So this is low right here, this bearish low, this bearish candle low, M15 low, this is going to break. This candle is going to break this low and probably come deeper. Okay. Fifty 52 74. Right. So that is that zone. That is the next zone. If price comes above here, we break right through this. Here's what's going to happen now. Let's take another order there. 36. 2737. 2737. Okay, so if price breaks this high, here's what's going to happen. If we break this high here, right, this high, this M15 candle high, the high is 2742.79. If price comes and breaks this high, we're coming all the way up to this light red area, right? That's another 48, almost 50 pips above this. If you break this high, we're coming all the way up here, because this shouldn't hold price, and price has already tapped into this liquidity candle, whatever this candle that was coming down, or there is no candle. This gap price is already tapped into that gap, right? So if we break above this high, come up and break above this high, then we're coming all the way up to this light red area. This light red area, right? And then if you break that, we are coming into this light red area. So in this light red area, there are two places to take sell trades, right? You got to watch price on the smaller time frames before you take entries there. Or you can place pendings or orders with stop loss just above the light red area, right? So 2747.9, 2749.4, okay? And the reason for that is, let's see, why did I mark those areas on Friday? Because of that. And the 5-minute possibly because of that, yeah. 47.96. Yeah. So 2747.96, 2749.4, right? Stops above maybe this swing high on the 5-minute, right? So that's about 26 pips, and then about 39 pips, right? And if you do break that light red area, we're coming to this area. And there are two entries there, 2751.6, 2755.8. Okay, that's it. Now we're coming down. 15-minute broke the low. As I said, it broke the low, should come down. So the whole idea is this M15 candle should hold, right? That's the one that retested the low. It broke, it created a new low, went up, and is pushing price up. This candle should hold. If this candle breaks, then this trade idea is invalid, right? Then we're heading higher. 98, 95. Okay. Just give me a second, guys. I'll be back in 2-3 minutes. 5-minute candle close. Yeah, we are closing. Finally, my sounds are back on. I'm going to get to drawing the M15 support resistance in a bit. I haven't forgot them, don't worry. Draw them right now. Okay, let's get to it. M15 SR levels, right? M15 SR levels. Thirty-three. Three. Okay, there's SR level right there. So candle needs to close back above to head up, right? Yeah, here, touch here. Yeah, perfect. Okay, then above. Above. Yeah, there's one here. 36. 36. Yeah, 36. Yeah. Then let's draw one below as well. Yeah, here, right here. 39. 39.75. 29.75, sorry. Mm-hmm. 29.9. Okay. Yeah, that seems about right. Let's just inspect these to the left. Yeah, perfect. 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 It's perfect. Okay, these are all right. So all right. So let's look at what has happened so far. 5 minute closed above the support, went to the next one, right? Closed above, came, grabbed liquidity, should go to the next one. Once we close above here, we should head back into, where is the one above? There's nothing happening in the NY session. Just no volume. So we are here. It's 41.3. 41.3. To 2.5. No, this is not right. Got that. Got resistance right here. Yeah, we got resistance right there. 40.10. Yeah, that's better. Yeah, perfect. Perfect. So that's the next resistance. Once we close above here, we should come there. That's if we get there. We're still struggling here. There's no volume, absolutely no volume. Very similar to what happened on Friday. Friday also we just ranged. You can see what happened on Friday. It's very similar to what happened on Friday, right? Price was pushing up very slowly, snail pace. It's pushing up. Waited until the 4-hour candle opened. Once the 4-hour candle opened, boom! One single 110 pip M15 candle, 110 pip with the with the new 4-hour candle open. That's when the volume came in. So right now it's very similar. There's nothing. Price is just ranging. We've got nothing. It's neither going up or neither going down. It's just ranging. Um, the stop loss on this trade is here under this M15 candle. If this low breaks, obviously this trade idea is not valid. The whole idea is we've retested the London low. This is H4 demand. We've got a H4 high liquidity demand zone right here. There is a liquidity candle right there, and I've got my entries a little above. It's a little too high. I should have taken my entries down here, but nevertheless, yeah, I'm about 13 pips, 10, 12 pips uh, above where I should have taken the trade. But price may come down and then go up, or if we come down, and once we start to break, let's see, M15 candle. Yeah, if we come into this range, this 15-minute range, this 15-minute wick range, it's about a 23 pip. Then I'll manage risk on these trades, right? So price has to come into this range right here. If we come into this range here, that's about 23, 24 pips, then I'm going to manage risk on these trades above. Okay. Until then, I'm going to hold them, anticipating a move up into this light red area and then eventually to the London high. That's the idea. Okay. Mm. Okay, so we've got support here, support here, support here. I mean, we got support here, two resistance levels here, and further down, if price comes further down, it's got a level right there as well. 2769, 763, 763. This low is 788. It's 6. Yeah, that's the next support level right there. So we've got 3 levels of support below current price, 2 above. We can draw another one above as well. 65. Yeah, perfect. Yeah, okay. Okay, we are eventually here now. Finally, we're heading up. We did come. We pull back for another 15 and 15 low. We should head up. Once this candle closes, price should head up because we've grabbed liquidity now, right? This one grabbed liquidity below this. This one came down further, broke that one. So now the next one should probably, let's see if we have a liquidity grab on the 1 minute. Yeah. Uh, yeah, that candle right there, but it's not here. 31.5. 145. Four seven 145. Yeah, that's more accurate. Eight 19. Yeah, we're heading up now. We should head up to this level first. Partial should close. 8, 20, 45, 95. Let's get rid of that as well. Yeah, these three are more accurate. Sorry, these three are more accurate. 56. Yeah, that's better. So once we close above here, we're coming to this resistance right here. And then these are all fine. 35. It's the 1 hour close. Yeah, the 1 hour closed bullish. 1 hour closed bullish just above these resistance, but below this resistance right here. So we need a 15-minute. We need a 5-minute close. So this is closed in support inside the inside resistance. We need another 5-minute close above, and probably the next one will pull back and then grab liquidity and head high. If you look at the 1-minute time frame, this is a liquidity grab from support. That is why I readjusted it, right? That is why I readjusted, because it's a liquidity grab. Okay, so partials have closed on one of the positions, is it? Yeah, just on one of the small positions, partials have closed. 40 pips. So we're heading here, this area right here, heading to that TP level, and that resistance right there. So yeah, so the trade idea did play out. Okay, so that was one entry right there. I took 2731.98. It did come to this support level also here, so that you could have gotten on the trade. Stop loss below that candle, 37 pips, 36 pips, and that is 53 pips. That's first TP, 53 pips, and then anticipate the move through this red area to the next red area, which is there, right? Another 100, to the top of this area. Yeah, to the top of this London high, basically. That's the anticipated move, so that's about another 78 pips away, right? So that's entries below here. So price unfortunately the NY session price didn't pull back all the way down here. Okay, so closed. These small positions have closed. I've just got this one position left now. I should have taken more positions, but I didn't. I didn't want, because it's Monday. I don't want to unnecessarily over risk on a Monday. So the trade idea was pretty simple. I said this right before the NY open. The London low, retest the London low. We are in a high liquidity demand zone, H4 demand zone. Price should push up to the London high because we've rejected this area, pushing up to the London high. But before we get to the London high, we have to get through this light red area. And right in the middle of the light red area is the Asian high. So we need a 5-minute close, or a 15-minute close above the this area to get price up. Okay, so now price is heading up here, 117 pips. Yeah, so what I'm going to do now is, I'm going to see how price reacts to this area. Okay, I'm going to take a closer look at how price reacts to this area. If we start to close below the Asian high, reject the Asian high, close below, then I will close this small position that's open. Otherwise, I'm going to let it run all the way here to this light red area, above this London high, to this light red area right here. Okay, that's 145 pips, 145 pip trade. 47, 2747, 27. Yeah, so that's final TP. 142 pips, 142 pips, okay? 142, 143, right there. That's final TP, 145 pips basically. Yeah, 145 pips. That is the final TP on this trade. I would have liked price to come deeper in, to get in, but it didn't. Have closed above. We might pull back, but I don't want to take any trades because don't want to take any more buys because we've already touched this light red area now. So now we could, as I've said, the reason I marked this light red area, got to keep in mind why I marked this light red area. This light red area is a liquidity candle to push price down. You can see this candle right here, 62 pips, and it kept price down. And it's right, we've got a resistance right there. So if that holds price, we're going to push price down deeper in. If this resistance holds price down, okay, so then I might close my trade. Um, yeah. Let's draw a few more support resistance levels. So we got one there. Got one here. $41.50. Yeah, that's better. That's better. So close above that, we're coming here, and then the next one after that is, do we have another one? Yeah, maybe we can do another one. Yeah, right here, 44.80. Yeah, we tapped this high, 456.4. Yeah, we have tapped it. Perfect. Yeah, so that's the next one. So these are the levels that we've drawn. I've drawn these. You've seen how I've drawn them. So perfect tap. I readjusted it because I've drawn it incorrectly. This was a very important in high volume time. This step is very important in the New York session. After the NY open, this 15-minute tap, right? And I saw it on the 1 minute because I've said this many times. You will see a 1 minute tap. Once a level closes above, you see price come back, tap it on the 1 minute, grab liquidity. You'll see a liquidity candle on the 1 minute before price goes in that same direction. Okay, so the 5 minute closed above this support. That was the 1 minute tap right there. That is why I readjusted. There is no tap here. This is just a bearish candle. That's the liquidity candle, right? And see, after that we went straight up. Price never came up to that low, right? It never came straight up there. Oh, sorry, it's 100. Um, yeah, so we're running about 50 pips right now. The whole idea is to hold it to the London high and maybe higher than that to that. Okay, so what is that? 140. So let's make this 150. Keep this at 30. Okay. Okay, so that's a positive RR trade today, which is what I like, which is what I always aim to take. I try not to ever take a negative RR trade. That is not my trade plan. It's not in my trading system to ever take a negative RR trade. Um, so stop loss, I'd given out this idea right at the beginning of the NY Open, price to move up. If you go back and watch the first 30 minutes, you'll understand why we took these buy orders to go up here, right? So once you break this light red area, we should head to the London high. Once we close above the London high, we should head straight to the next, that's the next liquidity area, right? So this is a liquidity candle right here. So price can hold and push down. It's very possible. Right? It can hold and push price down. So you got to be very careful. This candle right here, one on the 5 minute, right there. This candle low is 38.71. 38.71. 38.71. We can tap it and come straight down. It's very close to it. We can tap it and come straight down. So I'm going to see how the candle closes. There's a 1 minute, there's a 5 minute candle right there, liquidity candle that pushed price down. It's a part of that big candle. Just about to tap it. If you close above it, the next one will pull back. I pull all the way back and then continue higher, but let's see. We tapped it, 38.71. Right, we tapped it. It's no top wick. Is it going to close with no top wick? The next one is going to pull back if it doesn't. It's very likely. Yeah, no top wick. Yeah, we closed above support. Closed above the resistance, sorry, closed above resistance. Tap 38.71, closed above resistance. Let's see. If it does reverse, I get stopped out, I'll lose about 48 pips. What I can do is, yeah, I don't want to bring my stop under this because this is the liquidity candle right here. So I'll lose about 48 pips. And if it comes all the way here, so we are rejecting that 2738.7 or 2738.96, right? That was the green area that I put. It seems like it is rejecting that area. Yeah, it's rejecting on the 1 minute. Let's see if it's going to hold and push price down. It very well could. get it on the 1 hour. $44. Yeah, so I might get out at 2744. Let's see. TP is right up there. Yeah, so just going to leave it. I'm not going to do anything. I'm going to leave it. Two seven 47. Yeah. I'm going to leave the TP at 2747. I think bullish volume might carry it, or it might just reverse here, or it might reverse at the London high. If you break this, then we're coming to the London high, and it could push price back down, or if we close above the London high, then we're coming into this light red area. Either way, I'm going to just leave the trade. It's a Monday. I've taken a very small position. If I get stopped out, so be it. It doesn't matter. I'll lose I'll lose nothing. I've already made 0.48%, almost 0.5%, so I'll lose nothing if I get stopped out on these trades. So I'm going to leave it. Okay, the support resistance levels seem good. Yeah, these are all correct. And now, if I were to draw another one below 34, 27, 95, 27. This low is 88, yeah. Eight oh five. This low is 788. Yeah, perfect. So these are all SR levels. So basically, we close above 1 on the 5-minute. We pull back, grab liquidity, and head to the next one, right? That's the reason I draw these. So if you're a scalper, it's very possible to trade these. Very, very possible to trade these. If you know how to manage risk and you know how not to overtrade or over risk, then it's very possible to trade these. If you're a professional scalper, you can easily trade these SR levels that I draw, right? They are very accurate, these SR levels. They're very accurate. You can see the tap. I just pre-NY tap, closed above, tapped, closed above, right? Then to the next one. Then if you look at the 1 minute or 5-minute, you will see, if you go down to the 5-minute, we closed above, so we should come, tap back this area and then continue higher. Closed above, should come down, tap and continue higher. But now we're coming to H4 supply. You got to keep that in mind. We're coming to H4 supply. We have a rejection here. It's not the kind of rejection I would worry about on the 5-minute. It's not a rejection candle. It's almost like a doji. So I wouldn't worry about this 5-minute candle at all. On the 1-minute, I see a rejection, but that rejection has already been broken here. The high is taken out, so we are heading higher. Because this rejection, I'm not worried about. This kind of rejection, not worried about. It might push price down, but it's not going to reverse price and drop another 100 or 150 pips. you need to see a pin bar or an engulfing candle. This is the candle that you want to see from supply. That kind of a candle. 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 These are the kind of candles you want to see from supply. The bearish engulfing candle, pin bar. These are the kind of candles. These are what retail traders, the names the retail traders give these, right? But these are, I visually identify these candles as liquidity candles. So this candle here, um, yeah, this candle here, these two candles here. And you can see price broke the high easily because it's not one of those candles and we're heading higher, right? So we're heading to the Asian high. That was the first stop, Asian high. And then the London, if she close above the Asian high, then we're heading to the London high. Okay, I'll just be back in a few minutes. All right, so we are heading through that light red area. So once we break the high, we're heading to the London high. That was the initial trade idea today, just before the NY session open. We are the trade idea is playing out exactly as we planned. So price made a London low. You can see that's a London low. LNL, that's London low. LNH is London high, and retested it. And I wanted to see a M15 low break before we head high, and that's when I took the entry. I waited for this M15 to break this low. I wanted, because there was only one break here during the pre-NY session. I wanted to see another low being taken out before we head high. It took out. The next one came, and I placed the entry right here, 27331.98. That entry has already closed. I have just one entry left just above here, 2732.7, and that entry I'm going to hold it to 2747, right? Because once we break this light red area, the next liquidity area is this. So remember, price always travels from one liquidity area to the other, right? When it's moving up or it's moving down, for that matter, right? So the next liquidity area is this candle right here. So we've already tapped that area. So my final TP is just underneath that. Okay. Can get a, just to avoid confusion. Yeah, so that's the final TP right there. That's about 145 pips. If you get there on this trade, and stop loss, I mean, here, this should have been the entry. That was the first entry. It's about a 40 pip stop loss for about 145 pip trade, okay? So partial positions have already closed. So there is just one small position left. So I'm going to hold it. I'm not going to close this. I'm going to hold it. If it comes back and stops me out, so be it. But I'm going to hold this trade until 2747. Okay, to this light red area right here. Let's just see what's happening on the 5-minute. Do we have a rejection off here? No, this is not rejection. So this high should break. This 1-minute doji high should break. Price will pull back, probably grab liquidity from the support level here, from this support level, and then head up and break this high. Yeah, but just keep in mind we are inside. We are inside this area. We've broken the high here, 42.79. This is high 42. Yeah, we have broken the high here, so we can get rid of this light red area right now. Get rid of that. Get rid of that. Get rid of that. Okay, so price is now has broken this liquidity candle high, so we should head up to we should head up right through this, because if you remember at the beginning of the session, this H4 supply zone is not a high liquidity zone. This one right here is not a high liquidity zone, right? The one above is. So that is why it's not marked, because it did not take out opposing demand. It did not take out, if you look on the H1, it did not take out anything. So it's not a high liquidity zone. So we anticipated price to come to the London high and then break through and come straight into this area around 2750. Okay, that's where price should head today, 2750. So this is the moves that you want to kind of be in on, right? Positive RR or high reward, low risk, high probability, high reward moves. And those moves generally are always when you get on the right side of institutional trading, right? So when the institutions are trading, that's these big candles here that you see, these moves, 67 pip candles, these are institutional trading, right? That's the move that you want to be a part of. You're this tiny retail traders are these tiny little fish that are riding on the back of these massive whales. Okay, that is the kind of move that you want to be a part of. to take those moves. They offer those kind of trades offer low risk, high probability, high reward trades, positive RR trades, and those are the trades that I always try to take. I try to be a part of. I don't get it right all the time, but I try. I try my best to identify those zones, identify those. Um, I draw the correct H4 supply demand zones, identify the correct high liquidity zones, identify the correct liquidity candle in the high liquidity zone, and then draw support resistance levels correctly. If you draw them correctly, price taps them perfectly on the 1 minute and the 5 minute, right? It taps them perfectly on the 1 minute and 5 minute before you see the move happening. So if you look here, it's perfectly on the 1 minute and the 5 minute. You'll see how price tapped the zone, right? And then the move started. And I draw these zones every day. I draw them live on the streams every day. The supply demand zones, the support resistance levels, I draw them so that you can watch and re-watch these streams and learn exactly. And I explain them while I'm drawing them. I talk over everything that I do so that whoever wants to learn, who needs education on this, can get it. It'll take you time. It's going to cost you time. It's not going to cost you anything to watch these streams. It's only going to cost you your time and your effort. You don't have to pay for a course or anything. You just spend time on these streams, watch how it's done. I've been trading like this for many, many years. For many, many years. Um, you can just watch the streams, learn how to draw supply demand levels. This is the purpose. This is the mission of these streams. I've always said it. Learn how to draw supply demand zones correctly, identify high liquidity zones or HLZ to trade from, learn how to draw support resistance levels correctly, and then when price gets in, when you go in drawdown, then learn how to manage risk. And if you do those four things correctly, or if you learn to do those four things correctly, you will always end up with the right result. Always, 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 all the time. If you do these four things correctly, they will always lead to the right result, and the right result can be a loss or it can be a win, right? And if you win, you will have a low risk, high reward, high probability trade, just like the trade we had, the trade we took today. Or if you have a loss, you will lose less than your planned loss, right? So if you're risking 1%, and if you manage risk, if you learn to manage risk correctly, the way I do, the way I show here, you will lose 0.5% or 0.4%, 0.3%. That's what I do. You've seen, if you watch my streams last week or the week before last, you'll see when I manage risk, I risk about 1%, 1.5%, sometimes even up to 2%. But when I lose half of that, right? So that automatically increases my RR just by on the losing trades. If I lose less than my planned loss, then automatically my RR is increased. Even if I don't take positive RR or high RR trades, my RR automatically increases, right? Because I'm losing less than I had planned to lose on the losing trade. And if I do take high RR trades, then automatically my gains are a lot higher. I have no weekly or daily goals. I've got none of that sort, right? So I've no daily goals, no weekly goals, none of that. It's just all I can control, all I can manage uh, is my risk, right? And the number of trades I take. That's all I can manage. The number of trades I take and my risk. So this 5-minute candle shouldn't reject like this. If it rejects and closes a strong bearish candle below the Asian low, then we're coming down again, right? We're coming down. Um, yeah, but I'm going to hold this trade. I'm not going to close it. I'm not going to do anything because it's a Monday, and there are already I've already made gains for the day. So I'm just going to let this trade either hit TP or hit stop loss. but we should have a pullback to 2736. Price should pull back to 2736. That's a liquidity candle right there, and it's right at support level, and it's also at this fib level 2736. This fib is not your default standard MetaTrader default fib. It's a different setting. I've shared it before. um, I can share it again here. There's no secrets to this. There's a 0 level, a 0.25 level, a 0.5 level, a 1 level, a 2 level, and a 3 level, right? And then the 0 is the end of the fib. The 0.25 is your sniper entry right there. Then the 0.5 is your 1 RR. So if you get in and an entry at sniper and price goes up to that point there, that's 1 RR on your trade. And then the start of the fib, where you start drawing the fib, that's also your 3 RR level. And then if you get to level 2 or the second level on your fib, that's 7 RR if you get in at sniper. And if you go to level 3 of the fib, that's 10.5 RR if you get in at sniper, if you get in an entry at sniper. So I had placed this entry at sniper, but price didn't come pull back to trigger that. That's fine. We just, we're very bullish. So price did tap the uh, start of the fib or that support level right there and then push straight up. Okay. And these fibs are drawn basically on liquidity candles. So I had said that this is a liquidity candle of this candle. This is a liquidity candle as well. We identify this. If you watch the first 30 minutes of the stream, you'll see that I said that this is a liquidity candle from this high liquidity zone. Price came, tapped into it in the London session, tested, retested the area, rejected, closed above the London low with a M15 liquidity candle or M30 liquidity candle, which is that candle right there. And this candle had broken two previous lows. So there were two previous lows broken. This one broke this low, and then this candle broke this low. So I drew the fib on that candle, and that's how I draw the fib, right? So we tapped it perfectly here, 2731.9, and then we headed straight up, 100 pips straight up. So currently now, okay, the 5 minute has closed above, which is good to see. We couldn't close below. So we are heading high, we're heading to the London high. Once we close above the London high, we should head straight to our final TP, which is at about 145 pips. So when the 4-hour candle closes, that'll be the end of the stream. It's just a Monday, so I'm not going to stay here long. I've already been here about 2 hours, just over 2 hours. So once the 4-hour candle closes, it's been 8 minutes. I'm going to end the stream, and we'll be back here tomorrow to do the exact same thing. Do the draw up our zones, identify high liquidity zones, draw support resistant levels, identify liquidity candles, and then wait for price to come to our areas to take trades. Okay, that's the key. Wait. Once you draw your zones, you got to be patient and wait. Don't ever chase price, and do not trade on your mobile phone. You can't do all of this. You can't do your prep work. The reason I don't have um, any trading app on my phone, on my mobile device, no C Trader, no MT5, no Trading View, no MT4, none of that, is because you can't do prep work. All of this prep work that I did 30 minutes or 25 minutes or 20 minutes before the NY Open is vital to understanding what price is going to do within the first 2 to 3 hours of your session, right? And that's my trading window. It's 2 hours, 2.5 hours, 3 hours tops uh, after the NY Open. So this is very similar to the Friday's move, but the only difference is Friday's move happened with the 4-hour candle when the new 4-hour candle opened. but it's in terms of it's very similar. So the London session had come, made a low, price retested the low, pushed up, and then NY was very slow. NYSE open was very slow, NY open was slow, NYSE was slow, but I had said that the move was up, and on Friday also we took this trade going straight up. um, I think I took about, I don't know, I think of about 130 pips, 140 pips on Friday as well. If you watch Friday stream, I don't remember where exactly. I think the 4-hour candle and this I had closed positions when the 5-minute closed here, because I didn't want to get trapped when the new 4-hour candle opens. So I did close, but soon as price came and broke the M15 high, I reopened. I had added back my risk or reopened all those positions. Stop loss was under that candle, about 40-50 pips, and then we held it, I think, out to about to those highs there, 120, 125, or maybe about 120 pips, I think. So this is a similar move, but the move has happened just before the 4-hour candle closes. 4-hour candle should close in 5 minutes. What's happening? Okay, so there is a 5-minute rejection, but the rejection is above um, the support level, right? So as long as the 4-hour candle closes above this resistance right here, sorry, 2738, right? So 2738 or 2738.25, this resistance right here, as long as this 4-hour candle closes above it, we should continue higher. Okay, I'm going to end the stream in about 3 minutes. So just keep that in mind if you are trading later on after this 4, if you're trading later on into the New York session, keep that in mind. We could have a pullback and then continue higher. But this 4-hour candle has to close above this resistance. There is 4-hour resistance right here. So this level was drawn on the 15-minute time frame. But you can see if you draw them accurately, they are valid even on the 4-hour, right? That's 4-hour resistance right there, right there, right there, support 4-hour, support right there, and even here. Okay, so 4-hour resistance all the way, valid on the 4-hour. Okay, so this 4-hour candle has to close above this resistance, then price should pull back, grab liquidity, and head higher. And it will pull back to, one second, so we closed above here. Yeah, so we should pull back here. We should pull back to this level here, to 2736 or lower, maybe to this support level here, because the 5-minute candle closed above. We did not grab liquidity to go higher, right? We didn't grab liquidity. So price should pull back and then head higher, but the 4 has to close above this, above 2738.2 or 2738, right? 2738, 2738.2. We need the 4 to close above that. Then price should pull back to 2736 or even to this support level right here. That's where the EMAs are as well, and then head higher. Okay, so I'm not going to be here for that. I'm going to end the session in a minute and a half. Okay, so the 4-hour candle closed above here. We should pull back and head high. All right, and the 15 minute has closed back below this support. 5-minute candle close, so price should pull back now. Maybe it'll pull back to this area or maybe even lower. But the 4-hour candle, the high time frame has closed above, so we should continue high. Okay, so that's going to be the end of the stream. I'm going to hold this trade. Stop loss is exactly where it is. I'm not going to do anything to the stop loss. TP is exactly where it is. I'm going to let this trade either hit stop loss or hit my TP. Okay, that's the end of the stream. See you guys tomorrow.